In the last 4 years, NVIDIA has purchased 12 separate companies, and in some cases, sending the acquired companies' share prices soaring practically overnight. The question is, what companies are targeting now? To answer that question, we brought in our portfolio manager and buyout expert, Zach Scheidt. He's going to cover three companies that he believes could be takeover targets for NVIDIA. I hope you enjoy the conversation. All right, Zach, welcome to the Paradigm Profits YouTube channel. Thank you for being here. So what we wanted to talk about today, as I just mentioned, is NVIDIA potential buyout targets. So can you walk us through what you think maybe some targets NVIDIA is looking at for takeover?
Sure. Yeah, it's really interesting to see the way that this market is kind of evolving. The AI market, the high-powered chips market, and what NVIDIA could do to continue to grow. Because, at this point, they've kind of captured market share for their specific chips. And so they've got to find something new to continue to grow their profits, to continue to grow their business. And often for a large company like NVIDIA, a buyout is one of the best ways to do it. Instead of organically creating something, they can use their power, their strength, their size to buy a smaller company and use that smaller company's resources to continue to increase their profits. So if you look at NVIDIA right now, the stock, they're making headlines because if you add up the value of all of their shares in the market right now, they've got a $3 trillion market cap, which is the largest stock on any given day. That can fluctuate, that $3 trillion, but that's a huge amount of just wealth that's associated with NVIDIA. At the same time, they've only got about $15 billion in cash. And again, that also changes depending on the day and obviously what they're doing with their cash, but they don't have a huge cash balance. The thing that's really interesting from a takeover perspective is that NVIDIA can actually use its stock as currency. And we see this happen all the time. A large company will buy a smaller company and they will issue new shares of stock that replace the shares of the smaller company. So they'll say, like, if you own XYZ tech company, you no longer will own XYZ Tech, you will own a share of NVIDIA or 5 shares of NVIDIA or 3.2 shares of NVIDIA for every 1 share of XYZ that you used to own. And they use that stock as currency to do the buyout. And since NVIDIA's stock is worth $3 trillion, that's a huge amount of currency that can be used for these buyout targets, especially when you start looking at the size of the companies that NVIDIA may be interested in buying. So the first one that I wanted to talk about is Supermicro Computer, which is ticker SMCI. And if you followed the AI space or the tech space or the chat GPT, you're probably familiar with this company. Supermicro offers technologies that help data centers really perform at a high level. So they're known for their cooling systems, because when these NVIDIA chips start running and processing billions of analytics per second, it creates a lot of heat. And so Supermicro has these server solutions that really help to cool servers, that help NVIDIA's chips work more powerfully and more efficiently. So one of the things that NVIDIA could do is they could actually buy out Supermicro, which would give them what's known as vertical integration. So if you think about vertical integration, you think about you're selling computer chips, but you also want to sell some of the solutions that will help these computer chips work better. Or another side of vertical integration would be that you might buy a supplier that gives you the raw materials that you need to make those chips. So it helps NVIDIA own more of that total line of business. If you think of like silicon going into chips, going into data centers, going into data and analytics, that whole channel is available for NVIDIA to actually be involved in. Supermicro is a $47 billion company, which sounds really big, right? Yep. But if you think about it, compared to NVIDIA's $3 trillion market cap, Supermicro is just 1.6% of the size of NVIDIA. So NVIDIA could issue new shares of stock, just 1.6% more than what they already have on the market, which wouldn't do much to devalue NVIDIA, and they could use those shares to buy Supermicro. And so even though Supermicro is a larger company or a well-known company, it still is a great target for NVIDIA because of the size of NVIDIA and because of their currency. Go ahead.
One thing on that, and given the fact that they would be vertically integrating, NVIDIA would be vertically integrating if they were to buy Supermicro, the stock, even though they have to issue 1.6 shares of stock, 1.6% shares of their stock, the benefit may be way greater than that, and the stock market might deem it as positive, right?
Yes, that can happen. That can happen, and especially over a few weeks period. So it would actually be bad if NVIDIA didn't create value by buying a company. So the only way that this would work, and the only way that it works logically, is if NVIDIA says, if we own Supermicro, then we can integrate their products or their, the services that help data centers. We can not just have a few of our customers using Supermicro systems. We could have 90% of our customers now using this system because we can integrate it with our chips or whatever. And so it can wind up being a much more valuable company as a subsidiary of NVIDIA instead of on its own. And that is the synergy that we typically hear about whenever you hear of a takeover target. Second one that I've got my eye on is Global Foundries, which is ticker GFS. Now, Global Foundries is one of the top 5 semiconductor manufacturing companies. So they have all the plants to be able to generate these actual physical semiconductor chips. One thing that people don't often realize about NVIDIA is that NVIDIA doesn't make their own chips. They design chips, and they design the best chip in the world right now, but they actually take those plans and they give them to a foundry and have the foundry actually create these chips physically for them. So this would be another vertical integration type of a play where if NVIDIA were to buy out Global Foundries, then they could own the whole process of creating their chips. They could own the quality control. They could make sure that everything is done as efficiently as possible. They wouldn't have to pay Global Foundry a profit because that profit would go straight to NVIDIA. So it's a way of actually creating more efficiency with the chips they're making. Now, Global Foundry specializes in chips that are typically used for cars, for like autonomous driving, and some other use cases for AI companies. So they don't actually make the main chip that NVIDIA has designed. But by stepping into Global Foundries and by owning this company, it might allow NVIDIA to branch out into other areas such as driverless cars and some of the more important, just autonomous driving type technologies that are very important and very popular in a growth area that still has a long way to go before we kind of saturate any market as far as self-driving cars are concerned. So it gives NVIDIA a chance to actually get to their end uses, self-driving cars, other AI functions, while at the same time kind of controlling more of the manufacturing process for their own chips. So if we look at Global Foundries just as a business, Global Foundries has a $32 billion market cap. Again, it's a large company. It's not a micro cap or anything, but it's still just 1.1% of the $3 trillion that NVIDIA is worth. So it would not be difficult at all for NVIDIA to issue new shares to take over Global Foundries and use that synergy there. They no longer have to pay Global Foundries a profit. All of that profit then goes directly to NVIDIA's bottom line. So that's number 2. And the third one that I've been looking at is Palantir Tech, which is PLTR. And this is another one that many people are familiar with. It's a software company that analyzes huge amounts of data to find efficiencies for companies. Palantir is known for 2 different platforms that they offer. They have corporate customers. So, think about IBM or retail customer or any kind of, data center or whatever. These corporate customers use it's known as the Foundry platform to basically analyze data, figure out what the best business practices are, what can we learn from this data to create more profit or to engage more customers or whatever that function is. And then another side of their business is government clients. And so we're talking about political data, maybe military data, and all of that data is housed in the company's Gotham platform. So they have a corporate side and a government side. And the Gotham platform does the same thing. It analyzes data. It helps government agencies make good decisions, if government agencies actually can make good decisions on all the data. Exactly. Well, that may be suspect, but at any rate, all kidding aside, Palantir is a well-known, well-respected, established company that basically churns data and comes up with usable solutions based on the information that's available, which is exactly what AI does, right? I mean, it is the quintessential AI company that takes all the information and processes it in ways that no human or even just normal computer could do to come up with solutions. So this is yet another case of potential vertical integration. where NVIDIA could create the chips and then own how those chips process and spit out the data so they could then profit from this Foundry or the Gotham platforms that Palantir offers. Palantir is a $63 billion market cap. So if you added up the value of all of their shares, the company's worth $63 billion, which is a little bit larger, but it's still just 2.1% of the size of NVIDIA. So it still would be a very easy takeover target for NVIDIA. That's really the thing is when you have a company that's so large like NVIDIA, and by large, I mean the value of all of its shares combined, it creates a currency that's just very easy to use. So any resource that NVIDIA would like to have, they could use their stock to actually buy it. And that creates a tremendous opportunity on the buyout side. So as an investor, if you're looking at the potential for these buyouts to happen, it's important to not own NVIDIA, although there are reasons to own NVIDIA. But if you want to profit from a buyout transaction, you want to own the company that's being bought out. And typically when a buyout occurs, it occurs at a significant premium. So let's just say the stock is trading at $100 on a Friday night. So the market closes on Friday, the stock was trading at $100 on Friday. Over the weekend, the boards of the two companies get together and they hash out a plan, and NVIDIA says, we'd like to buy you. And the board says, we're not for sale. And then NVIDIA says, but we can give you more shares of stock. And the board at some point has to say, it's in our shareholders' best interest to take this buyout offer. Now, they're not going to do that if you're getting $100 worth of NVIDIA shares. But if you're getting $150 worth of NVIDIA share, or if you're getting $200 worth of NVIDIA shares, the board has a fiduciary responsibility to their shareholders to accept an offer that really does give value to those to the shareholders. So once that haggle back and forth has happened, typically, it's not always, but typically on a Monday morning, and we call it Merger Monday, there's an announcement made, and NVIDIA says, we just bought out Supermicro. Supermicro is now trading for a $47 billion market cap. They'll say, we bought it for $65 billion. And that means that every shareholder of Supermicro gets 3.2 shares of NVIDIA, or whatever that calculation winds up being. Right. But because they bought it at a premium, you typically see a large jump in the stock that's being bought once that announcement is made. And sometimes that can be a 10 or 15% increase. Sometimes it can be a 50 or 100% increase, depending on how well the board negotiated that buyout offer. And so if you are invested ahead of time in some of these names that are potential buyout targets, once that Monday morning hits, or that Merger Monday, and the buyout is announced, you'll wake up and the stock is already trading higher as soon as the market opens that Monday morning. Another way of profiting from that would be to own option contracts on some of these stocks. And of course, we know option contracts carry more risk, so you want to typically invest less money in any individual option play, because you know that you're not as likely to have a return on those options. But if you do get a strong return, it can be an exponential return, versus instead of getting a 20 or 30 or 50% gain, you might get a 200 or 300 or 500% gain, depending on which option you buy. So all three of these companies look like good potential buyout offers, or buyout candidates for NVIDIA. And then the last thing I'd say is that all three of these companies are actually doing really good things in their own respective businesses, and they are generating profits and they are growing. So all three companies actually look like good investments as standalone investments, which makes me a lot more confident in recommending these, while at the same time, the potential is for a much larger gain if a buyout offer is announced at some point over the next few weeks or months.
So these look like good plays on their own, with a little extra kicker in case a company like NVIDIA goes and buys them out. That's great. Zach, thank you very much. So we've got Supermicro Computer, SMCI, Global Foundries, GFS, and Palantir, PLTR, as Zach Scheidt's three potential takeover targets for NVIDIA. Zach, thanks for your time. I really appreciate it. And if you like this video, go ahead and click the subscribe button, and we'll alert you whenever we have new content coming onto the channel. Thank you very much for watching. And Zach, I'll see you again soon.
Thanks, Doug.